to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007.
Today, we are undertaking a really critical deep dive. We've got 4 major small cap announcements lined up.
And they cover a lot of ground. We're looking at energy transition, critical lithium, and some really high-grade gold.
Right. And our mission today is simple. We cut through all the noise and give you the core financial and operational results.
The numbers you need to see, the data points that tell you, hey, I need to look deeper into this one.
Exactly. We know your time is valuable. This is the fast track.
All right, let's get right into it then. We're starting with green tech, specifically in heavy industry decarbonization, which is a notoriously tough nut to crack.
A very tough one.
We're kicking off with PyroGenesis Inc., trading on the TSX, symbol PYR, and the headline is big. PyroGenesis signs a $1.3 million energy transition contract.
And that headline number, that's the immediate hook. It's a supply contract valued at $815,000.
Okay, so in Canadian dollars, that comes out to?
It translates to CAD $1,324,000. And this is for one of their proprietary plasma torch systems. It's going to a major European cement customer.
And when we talk decarbonization, cement is always in the conversation. It's a huge global polluter.
It really is. It accounts for about, 7% of total global greenhouse gas emissions?
So why is a plasma torch so important for this specific industry? What's the unlock here?
Well, it's critical because it goes right after the biggest source of those emissions. Here's the breakdown for you.
Okay.
40% of the GHG emissions from making cement come directly from the fossil fuels they burn to heat the calcination furnace.
That's the part that, cooks the limestone, right?
Exactly. The really intense heat stage. So this contract is literally for the electrification of that furnace.
So they're not just reducing emissions, they're actually swapping out the fuel source.
They are eliminating it. They're replacing a fossil fuel burner with a plasma torch. Plasma runs on electricity, not combustion. And the big leap, the reason this is news, is they're moving from small, low-power tests to megawatt-scale tests.
The industrial scale.
The industrial scale.
But I imagine that's incredibly complex, switching a whole heavy industrial process like that from burning stuff to pure electricity. What's the timeline look like? What's the risk?
Well, the takeaway here is that the tech is validated enough that a major player is moving ahead. They're entering a critical 9-month test phase.
9 months, okay.
And they're targeting delivery for the system in early Q3 2026. The CEO, Peter Pascali, he put it perfectly. He highlighted that this is and I'm quoting here, powerful pathway to deep decarbonization and efficiency gains.
So it's not just a one-off sale. This is a crucial stepping stone.
It is. It's a high-value test. If it succeeds, it basically proves the scalability of this solution for one of the world's most difficult industries to clean up. It's a huge signal.
It definitely feels like the momentum is shifting from just theory to actual industrial timelines.
Precisely. It's green tech becoming a real commercial supply contract with hard deadlines.
Okay, let's connect that urgency and energy transition over to the materials needed for it.
Yeah.
We're shifting gears to lithium.
Absolutely essential for that same transition.
We're looking at Q2 Metals Core. They trade on the TSX Venture, symbol QTWO, the headline. Q2 Metals reports standout lithium drill intercept at Quebec's Cisco project.
And this is one where you really have to lean in and look at the numbers because they are, frankly, massive. It puts the whole discovery in perspective.
So this standout result, it comes from one specific drill hole.
Yes, drill hole CS25044. And it delivered the widest continuous intercept that the company has ever drilled. Period.
Okay, give us those numbers. What do investors need to see here?
All right, get this. The main interval was a continuous 457.4 meters.
Wow.
457.4 meters grading a very impressive 1.65% lithium oxide. And then there was a second smaller interval of 36.9 meters at the exact same grade.
457 meters is that's an incredible width. It's not just about the grade, it's the sheer volume that suggests.
It's an exceptional geological result for a hard rock lithium project. Truly world-class.
So the company is already moving toward a resource estimate. How does a result this big fit into their plans? Does it change things?
Well, that's what's so fascinating. They're driving toward an initial inferred resource estimate for Q1 2026.
Right.
They have a conceptual target range, 215 to 329 million tons. But what makes Hole 44 so critical is that this massive intercept, it occurred outside the boundaries they had already defined for that target.
So hitting that kind of grade outside the target area, that suggests the whole thing could be much bigger than they thought.
Exactly. It doesn't really add risk, it reduces it. It validates that the mineralizing system is just way more robust and expansive than their initial models showed.
So that initial range is probably conservative now.
I think that's a fair assumption. The CEO, Alicia Millet, framed it as further showcasing the Cisco project as a, and this is her quote, globally significant hard rock lithium discovery.
And you can't talk about a discovery like this without talking about location. James Bay, Quebec, is becoming a major hub.
A huge hub, and they have fantastic infrastructure advantages. The project is close to the Billy Diamond Highway, and there's a railhead only 150 kilometers away.
So you've got grade, you've got massive width, and you have logistics.
It's the whole package. That 457-meter intercept is a must-track data point for anyone following the future of lithium supply chains.
Okay, from critical minerals now to precious metals. Let's shift over to gold exploration. We're turning to Cassiar Gold Corp.
Ticker GLDC on the TSX venture.
The headline: Cassiar Gold drills high-grade gold at Taurus, signaling expansion potential in northern BC.
And this announcement is all about their Taurus deposit. The results are so impactful because they hit on two key things that drive project economics: high grade and being near the surface.
So what's the standout number here?
The big one is an intercept of 13.53 grams per ton gold over 13.4 meters.
And crucially, how deep was that?
That's the key. It started from only 28.2 meters downhole. I mean, that's incredibly shallow. It gives you so much flexibility.
It really does.
Yeah.
But I saw there was something even more impressive inside that intercept.
Yes. The real attention grabber here is the ultra-high-grade material within that section. They hit subintervals, including a blistering 369 grams per ton gold over 0.4 meters.
369 grams, even over a narrow width like 0.4 meters. How does a number like that change the game for a deposit that's already pretty substantial?
It completely changes the character of the deposit. A grade that high, even if it's narrow, it significantly boosts the average grade of the entire block of rock around it. It proves the system contains these incredibly rich veins.
And this is happening in a deposit that already has a resource, right?
A very solid one. We're talking 410,000 ounces, indicated at 1.43 grams per ton gold, plus another 1.93 million ounces inferred.
And the key context, I think, is that the existing resource is also very shallow.
Absolutely critical. 91% of those ounces are within 150 meters of the surface.
Which points directly to an open pit scenario.
A low-strip, high-volume open pit. And finding these new high-grade veins so close to surface just reinforces that potential and makes the economics look that much better.
So the drilling is doing two things at once. It's confirming the high-grade potential is real, and it's also showing the resource is still growing outwards.
That's the essential takeaway.
Right.
They had successful step-outs, 30 to 110 meters beyond the existing resource model. The CEO, Marco Roque, he anchored it well. He said, and I'm paraphrasing, that confirming this near-surface high-grade mineralization shows the resource can continue to grow.
They're proving grade and size.
Grade and size. It's a very, very strong signal.
Okay, our final company keeps us squarely on high-grade gold, but this one's about a future plan that's built on some really spectacular history.
Right. We're looking at GGX Gold Corp, trading on the TSX venture, symbol GGX.
And the headline is, GGX Gold outlines 2026 drill program to pursue high-grade vein extensions in historic British Columbia mining camp.
So this is all about their 2026 program at the Gold Drop property. And it's entirely based on some of the most spectacular historical intercepts really you'll find anywhere. The key for an investor is to understand why they're drilling where they're planning to drill.
And that means looking at the old data?
You have to look at the old data.
Okay, so let's go over those historic numbers because they are pretty rare and they're the foundation for this whole 2,200-meter plan.
They really define the potential. We're talking about results from the old COD vein. Things like 129 grams per ton gold, 11,154 grams per ton silver, and 353 grams per ton tellurium, all over 7.28 meters.
And there was another one too, right?
Yes. Another hole hit 107.5 grams per ton gold and 880 grams per ton silver over almost 7 meters. These aren't just gold grades. It's a whole package of valuable metals.
And that mention of tellurium is really interesting. That's a critical metal, right? Used in solar panels.
It absolutely is. And it adds this whole other layer of potential value. It's also why the 2026 program is so strategic. They have two main goals. First, test the extensions of that COD vein.
The one with those incredible number.
The very same. And second, test the projected downward continuation of a major historic vein called the Gentonia.
And the Dentonia vein, that's what gives this potential scale, isn't it?
That's the connection. The Dentonia was a known producer. It hysterically yielded over 43,000 ounces of gold. So the goal isn't just to chase little high-grade
You're
pockets.
trying to connect the dots.
Exactly. Connect the dots between the COD vein, the gold drop vein, and this big Dentonia extension. The CEO, Barry Brown, was clear. He said the exceptional historic grades demonstrate the caliber of mineralization there. They're trying to see if this property hosts a much larger district-scale system.
A very ambitious plan, built on some truly spectacular history.
It is.
Well, that wraps up our rapid-fire summary. 4 critical announcements that give you a really compelling snapshot of the market right now.
It's a great cross-section. We saw PyroGenesis lock in a $1.3 million contract for clean cement tech.
Then Q2 Metals with that staggering 457-meter lithium intercept, which just screams resource expansion.
Followed by Cassiar Gold hitting up to 369 gram per ton gold right near surface, boosting the economics of their already large resource.
And finally, GGX Gold, using that incredible multi-element historic data to target a potentially district-scale system in 2026.
And this is why we focus on the hard numbers. The $1.3 million contract, that 457-meter width, the 369 gram per ton grade.
These are the actionable nuggets. They cut through the noise, and they tell you exactly where to spend your research time.
And that brings us back to something we touched on with GGX Gold, that complexity of having gold, silver, and the critical metal tellurium. It raises a really important question for you to think about as you do your own research.
Okay, let's hear it.
When you see an exploration project with multiple valuable metals, how much value do you think is typically assigned to those secondary or tertiary metals like tellurium? And how could that complex valuation